Welcome to FX Street. Today we're going to be talking about Polygon bulls buying the rumor on 25% gains. But before we dive deeper into the technicals, please make sure to subscribe to our YouTube channel and follow us on Twitter at FX Street Crypto to be updated on the hottest trends in the cryptocurrency market. Pardon, as it looks, Polygon firm rejection. Let's mark that up. Earlier last week, firm rejection on the 55-day, simple moving average, which of course then triggered a further downtrend, and that coincides as well with some large greenback strength, some large dollar strength, as investors fled into safe havens after the first earnings that came out in the US earnings were already signaling that some big corporates, S&P 500, NASDAQ corporates, would start missing on estimates and coming out lower. Although still profitable, they are coming out lower, and they're almost all reporting that inflation is biting into the profitable margins. So of course, that triggers a bit of a downtrend as well for Polygon on the backdrop of that. But for example, the biggest losing day was yesterday with almost 8% after Alphabet, Google earnings coming up short, and even reporting YouTube losing part of the market to, for example, competitors like TikTok. So should we see a repetition this evening from Facebook, for example? Expect a nosedive move all the way towards 105 or even below 1 towards 95. But at the moment, bulls are in the process of forming a knee-jerk reaction as investors are starting to get used to these kind of headlines and are starting to calculate that in for the next earnings to come. So it doesn't come as a surprise anymore after the gold shower from Netflix. Alphabet will probably be the last one, and investors will start to calculate that in for the other big earnings to come, for example, for Apple, etc. So they are already front running and they're already buying the dip with the prospect of a possible 25 pop all the way up towards 175, because all in all, as of next week, the Fed will start hiking. So they will start to trim that inflation and try to maintain it, which would then open up more room for more earnings and gains to come. And that would be the ideal climate for cryptocurrencies to thrive in, because in that correlation, the dollar will back off, will weaken, and that will open up some even more room. So we should see a sort of exponential move upwards with that double whammy all the way up to $1.60. We would be piercing through the 55-day, which would be very important in the fact that that cross that is still performing and still even eking out even further widening between the 200 and the 55, then could spark a reversal. Once we are trading above this 55 up to the 200, for example, 200-day simple moving average, that would mean that the 55 will follow suit and could be the unwinding of that cross by, for example, at the end of May. But that needs to be seen. As for now, bulls in the market buying the dip and looking set for that 175 to 180 dollar handle. As said, risk to the downside comes with Facebook, for example, or Apple earnings. Should those disappoint, then expect to see a drop back with bulls being pushed against this $1.20 handle, and then next breaking through to $1.06. But by then, relative strength index will be trading deeply in oversold and limiting any prospects from further gains for the bears. So they will need to swing to the buy side in order to cash in on those profits and automatically trigger a reversal because of the buy side demand tripling against the sell volume. That's it for Polygon for today. Please remember to subscribe to our YouTube channel and follow us on Twitter at FX Street Crypto.